Bitcoin's recent plunge has sent shockwaves through the entire cryptocurrency market. Meanwhile, Ethereum struggles to regain its footing, and regulatory pressures continue to mount. Here are today's top 10 stories you need to know. Recent sentiment analysis reveals a mixed outlook among investors regarding the future of cryptocurrency. A 2026 consumer sentiment report shows that 52% of Americans believe that crypto values will rise under a potential Trump presidency, while 60% expect overall increases in cryptocurrency values. Notably, 28% of Americans now own some form of cryptocurrency, with Bitcoin being held by 74% of crypto holders. Despite this long-term optimism, the report also indicates that near-term sentiment is under pressure due to macroeconomic headwinds, ETF redemptions, and liquidations. Investors are grappling with the challenges presented by the current market conditions, which may dampen enthusiasm in the short term. Moving forward, it will be crucial to monitor how these mixed sentiments evolve as the market navigates the turbulent waters of regulation and economic uncertainty. Regulatory scrutiny in the cryptocurrency space remains a pressing issue, as evidenced by the CFTC's recent request to a court to annul Gemini's $5 million enforcement deal. This action highlights the unsettled nature of U.S. cryptocurrency regulation and the potential for enforcement outcomes to change even after settlements have been reached. The implications for the broader crypto market are significant, as ongoing regulatory uncertainty can hinder growth and innovation in the sector. Companies must navigate a complex landscape where rules can shift unexpectedly, impacting exchanges, lending platforms, and token distribution methods. As stakeholders in the industry continue to advocate for clearer regulations, the outcomes of these enforcement actions will be closely monitored. The future regulatory environment could significantly influence the trajectory of cryptocurrency adoption and market stability. Aave Labs has announced that its subsidiaries have received approvals from the Financial Conduct Authority to expand operations in the UK. This pivotal development not only underscores Aave's ambition to establish a foothold in one of the world's leading financial markets, but also signifies a broader shift towards the institutionalization of decentralized finance. The approval highlights the growing need for DeFi protocols to align with regulatory frameworks, moving away from predominantly unregulated environments. As Aave navigates this transition, it could set a precedent for other decentralized platforms, fostering increased legitimacy and trust among traditional financial institutions. The implications of this move are profound, as it may encourage regulators in other jurisdictions to adopt similar frameworks, thereby enhancing the global DeFi landscape. Looking ahead, Aave's expansion could catalyze further regulatory cooperation, leading to a more structured and secure environment for cryptocurrency users and investors in the UK and beyond. The rollout of USDC payments through Cash App marks a significant milestone in the maturation of stablecoin infrastructure. Recent data reveals a notable rise in USDC ownership among surveyed users, climbing from 12% to 18% over the past 2 years. This surge indicates a growing acceptance of stablecoins as integral components of the cryptocurrency ecosystem, especially amid ongoing market volatility affecting speculative assets. The increasing reliance on stablecoins for everyday transactions showcases their practicality and reinforces their role as a stable financial tool. As users gravitate toward these digital currencies, it reflects a shift in consumer behavior and trust in blockchain technology. The maturation of stablecoin infrastructure not only bolsters the crypto market's stability, but also paves the way for innovative financial solutions, such as decentralized finance, DeFi, applications. Looking ahead, as adoption continues to rise, we may witness a transformative impact on traditional finance, potentially reshaping how individuals and businesses conduct transactions in the digital age. Block's Cash App has begun rolling out USDC payments to approximately 25% of its nearly 60 million users, with plans for full access by the end of the week. This move is significant as it enhances the utility of stablecoins, particularly USD Coin, within a mainstream consumer payments platform. Stablecoins have gained traction as a reliable digital currency option, providing price stability in contrast to the volatility typically associated with cryptocurrencies. The push for stablecoin adoption reflects a broader trend of integrating cryptocurrency into everyday financial transactions, making digital payments more accessible and user-friendly. As more users adopt stablecoins like USDC, this could lead to widespread acceptance in various commercial contexts, from online shopping to peer-to-peer transfers. The strategic significance of this rollout cannot be understated, marking a shift from crypto-native settlement tools to practical applications in daily transactions. Moving forward, the success of this integration may influence user behavior and shape the future landscape of digital finance. The SUI mainnet has encountered a serious issue, ceasing block production on May 28th due to a confirmed network stall. This significant disruption forced the team to pause transactions to protect user funds, resulting in an 8% drop in the value of SUI. Such outages are critical as they directly undermine confidence in a blockchain's operational reliability, particularly for users and developers assessing various networks. SUI, which gained attention for its innovative approach to scalability and user experience, now faces scrutiny regarding its infrastructure's resilience. This incident serves as a stark reminder of the vulnerabilities that exist even within emerging blockchain technologies. As the community awaits updates on the recovery process, the impact of this stall could have lasting effects on user trust and adoption, potentially deterring new developers and investors from engaging with the platform. Stakeholders are anxious for transparency regarding the root cause and timeline for resolution. Future developments will be closely monitored, as assurance of the network's stability will be vital for restoring confidence and encouraging further participation in the SUI ecosystem. The broader cryptocurrency market is experiencing a significant downturn, with major altcoins selling off alongside Bitcoin and Ethereum. Notably, Solana has dropped 3.5%, XRP is down 3.6%, and Dogecoin has seen a decline of 3.2%. This widespread selling reflects a growing concern among investors about macroeconomic pressures, including rising inflation and interest rates, which have contributed to a general reduction in risk appetite. As traditional markets grapple with uncertainty, cryptocurrencies are not immune to these systemic issues. The declines in these assets indicate a broader trend, suggesting that market participants are reassessing their positions amid heightened volatility. This environment necessitates a cautious approach as traders weigh the potential for further declines against the possibility of recovery. If this trend continues, we could see altcoin prices drop further, leading to increased market instability. Investors are now closely monitoring key indicators for signs of stabilization, with hopes that upcoming regulatory developments or technological advancements could provide a much-needed boost to market confidence. The recent sell-off in the cryptocurrency market can be largely attributed to significant ETF outflows, which have raised concerns among investors. Reports indicate that there were over $648 million in ETF outflows, along with $982 million in redemptions just in the prior week. Notably, BlackRock's Bitcoin fund has also seen substantial outflows, reflecting a broader trend affecting major players in the space. Exchange-traded funds, or ETFs, have become a popular investment vehicle, driving bullish sentiment for Bitcoin and other cryptocurrencies. When this demand fades, it creates an environment where spot demand support can weaken quickly, leading to a cascading effect on prices. The implications of these outflows are concerning, as deteriorating sentiment often leads to increased volatility and selling pressure across the entire market. Investors are feeling the strain as they grapple with this latest development. While traders remain hopeful that a rebound in ETF flows could help stabilize the market, the current landscape is uncertain. Analysts suggest that monitoring macroeconomic indicators will be crucial in determining the next moves in this volatile environment. The coming weeks will be telling for the future of cryptocurrency investments. Ethereum has experienced a notable decline, with its price plunging 4.2% to around $1,976, marking a second consecutive session below the critical $2,000 level. This downturn highlights a broader trend of selling pressure that is affecting the entire cryptocurrency market, not just Bitcoin. The recent volatility can be attributed to various factors, including regulatory concerns and macroeconomic uncertainty, which have contributed to a bearish sentiment among investors. Analysts suggest that Ethereum's struggles mirror a phenomenon known as crypto beta compression, where market movements are heavily influenced by Bitcoin's price fluctuations. As Ethereum attempts to stabilize, it faces challenges in regaining key support levels that are essential for investor confidence. The implications of this decline extend beyond Ethereum itself, impacting the overall cryptocurrency ecosystem as traders reassess their strategies. If Ethereum cannot reverse this trend, we could see a further erosion of trust in digital assets, leading to increased volatility and potential market corrections. Conversely, a successful rebound could restore optimism among investors. In the coming weeks, all eyes will be on Ethereum as it seeks to navigate this turbulent landscape and reclaim its position within the market. The outcome will likely shape the future trajectory of the cryptocurrency space. In a dramatic turn of events, Bitcoin has slipped below the crucial psychological support level of $73,000. Reports indicate that Bitcoin traded as low as $73,000 USD intraday, while it fluctuated later between $76,000 and $77,000, illustrating a volatile trading environment. This decline is significant because Bitcoin serves as a liquidity benchmark for the entire cryptocurrency market. Historically, when Bitcoin weakens, altcoins frequently face sharper declines, leading to a ripple effect throughout the crypto ecosystem. Traders appear to be de-risking their positions, which raises concerns about Bitcoin's ability to maintain its recent support levels, especially following a strong upward trend earlier this month. The implications of this downturn are profound, as it could signal a loss of confidence among investors who have been buoyed by recent gains. If this trend continues, we may witness further sell-offs across the crypto landscape, affecting both retail and institutional investors who have heavily invested in the market. As the market absorbs this shock, traders will be closely watching Bitcoin's performance to gauge the potential for recovery or deeper declines. Analysts suggest that a failure to reclaim the $73,000 level could lead to a more extended period of bearish sentiment, prompting a cautious approach in the coming weeks as market participants reassess their strategies. Thank you for tuning in. Which story shocked you the most? Let us know in the comments, and don't forget to like and subscribe for more updates.